I think what we'll do, we'll start off the panel. We had a lot on ESG, but I think we'll start off the panel. Frederick, we'll start with you. Just tell us a little bit about yourself, about your company, and what you see for the plans coming forward.
Yes, I am managing director of Multi Poland, also covering Ukraine. Multi Corporation is based in Netherlands as a group, covering 14 countries. We are present in shopping centers, offices, also hotels. Recently in Spain, we are mainly managers, asset manager, property manager of different asset class. And we are, as I say, in Poland we have 6 assets. In Ukraine, 1. I think it's enough for now. In Ukraine, it's in Lviv, quite safe place, but still very difficult situation.
Yeah, thank you. And Anu, please tell us a little bit about your company and what you're doing.
Hello again. So my name is Hannu Käki. I'm from Hyperin. Hyperin is a software service provider for shopping centers and mixed-use properties. We've been in the market already for 15 years by today and serving more than 250 malls in Europe and Asia. Our clients are portfolio developers like multi and management service providers and experience with working with many leading international operators in that industry. Services, our offering is mainly focused on tenant communications, tenant engagement, and tenants reporting the sales revenue, and also engaging the tenants in the consumer marketing activities. And all that relates in many ways actually on this ESG agenda. Some of the past slides that Hubert was showing there. So there are many topics that we see how our customer management, shopping center management teams especially are day-to-day basis using our services also in that ESG path.
Mm-hmm. And I imagine with your software, it's easier for the managers and the owners to just measure it, measure what they're saving.
Yes, that's true. That of course that's not or it hasn't been so far the key drivers for our services, but this is some of the topics that has been on the table within the past years. I was just during the presentation, I was thinking that 4 years back when I was in previous company in the transactions, actually commercial real estate transactions. So this ESG was kind of nice to have still at that time, and within past couple of years, it's been coming more mainstream. Of course, early adopters are something different, that they have been there already for a little bit longer time.
Okay. And Thomas, tell us a little bit about what you're doing at EY and how you see the market here in the Baltic region, northern Poland, and what your experience is so far.
Good morning. About market conditions, what we observe, what was already said today in the previous panel, wait and see approach is the most common attitude right now. We see it in numbers. The volume on capital markets for the first quarter was 60% down comparing to last year, which is a proof that the investors are delaying their decision or abandoning projects and waiting until the new balance will be reached. The owners are probably reluctant to accept the decrease in prices, trying to cover this with indexation, with rental increase due to the indexations. the new buyers are coming, watching, but waiting for the new prices stack to be applied.
Yeah, and even at MIPIN this year, I saw a lot of the cash buyers coming back, which I hadn't seen for 4 or 5 years. And they're at MIPIN and sort of starting to look at properties that are going to be available, I think. Yeah, I mean, are you seeing the same thing where I think they're happy there's no more bonds, there's no more cheap money, and they're coming back with their...
But this is also important factor that financing is not no longer so easily available. You cannot get a 65-70% loan to value loan. 50-55 probably is the optimum leverage that you can apply in your spreadsheet, which makes investment more equity driven, which again reduces the return on equity. So all this result in this reduced volume.
Right. And
so until, as already also was said, until the interest rate would not at least start decreasing, until we would see in a capital market, probably the volume would not recover.
Right, and the general consensus is we're not at the bottom yet.
I wouldn't say so.
Yeah, you think?
I think we are bottoming out.
Yeah, so generally the investors think we're pretty much at the bottom, and now it's just about interest rates.
Yep.
Yeah. Okay. Great. Frederick, just going on, as you're managing and owning a couple of shopping centers, how do you see your plans for the future? Are you investing in more retail locations, or are using more the let's say the expertise of managing? Where do you see the business going, and what would you like to see over the next 18 months in your company?
We see in the retail industry, we see that the big shopping center, lifestyle shopping center, are really working well, and the convenience. In between, we have some the scheme have some difficulties, would need to be repositioned. So we see our position here as multi to help some we can say some funds or investors to reposition the asset. It can be a mixed use. It can be other repositionings that we are already doing in several countries, especially in Netherlands. We have our own architects to do that. This is something that will happen because we can see some old shopping center, 20 years old, maybe not very old, but for Poland it's old already. With a big hypermarket and a small gallery, not attractive enough now to for customers, and would need to have a new ID. So we see our job here to help, to support, and maybe also some opportunity to invest ourselves.
Yeah, I mean, there is a lot of these first generation shopping centers that are medium size, and they were doing great business for the first 10 years, and now something new is opened up close by or something bigger. So what are some of the options, or one or two of the options that an owner can do, or that you would recommend to an owner? I know each situation is different, but what are kind of one or two of the options that an owner can actually do where they've lost the footfall to the, let's say, newer, shinier competitor, bigger shopping center? What are some of the things they possibly could do with the older location to revitalize it?
We are looking at all possibilities. So we are trying not to limit ourselves. There are some restrictions with the master plan, with all we can say authorization permits that we have to get. But I think we have to look at a long-term strategy for the asset. If it's not working on retail, we need to reposition on another field. Especially, I think hotels are a very good repositioning sometimes for some assets that we did. In an example is Forum Rotterdam that we did. It was a very old shopping center with a very old also tower of offices, and the tower was refurbished from from scratch, just leaving the concrete and turn into a premium residential. And we left only retail on the ground floor. First floor and the third floor was only for services, medical, fitness, and so on. And it works now quite well.
Right, and the residents living there, of course, are using the services and the shopping. So that's so a little bit less retail and some other kind of its own little.
But sometimes we need more retail. We can see in some shopping center retailers asking for more spaces. So it depends on the attractiveness of the location of the shopping center. But as I said, we observe, and our observation as big shopping centers, the lifestyle, we can say Westfield or world-class shopping center are working quite well now.
Right. Okay, great. And Hanu, with more and more of the world becoming digital and using digital services, can you tell us some of the benefits or the top one or two benefits that a shopping center the shopping center managers or owners would really receive from implementing and using your software, and how long before when they've agreed to use it to when it actually goes live and they're benefiting from it?
Well, our services can very simply divide it in B2B, which are more on the landlord to tenant side, and then the other one is B2B to consumer side. And of course, going to live varies on that as well. So it can be something from 1 month to 3 to 4 months. And of course, the benefits can be understanding better and on even day-to-day basis how your mall is performing when it comes to footfall and sales revenue of different stores. And then quite recent trends what we have seen is related to this agenda as well, that within the past even I would say within the past year, we've seen increasing that how landlords are focusing on this B2B side more on ESG topics, that how they communicate towards the tenants, mainly in this case towards the stores, and not just the store managers, the key contact people there, but also the whole personnel even. And when talking about medium size and large size shopping malls, you can have more than 1,000 thousands of people, personnel working in those big properties, and reaching out to that audience on these teams, so it can make a huge difference as well. And this is quite recent, and of course some of our development has been quite recently focusing more on that side as well, that how we can enable success for our customers, landlords on that side. Then the other part would be this consumer side. So now post-COVID times, during the coffee break, there were discussions also that what is the today's hybrid office policies, and they are still changing. Today is different than it was in the fall, and probably after the summer the policies are different. So this consumer side, many malls that they have been actually recovering quite well after the COVID, and even though now we have this war and inflation and all that, and the interest rates. So yeah, there it's offering, enabling high quality marketing together with tenants, stores towards the consumers, that they can together attract the visitors to come there. And on the other hand, it's also further evidence for the landlord towards the tenants that why they are paying the lease, and why there are marketing fees. So it can be also based on data that this is as much as this much of traction we are gaining in these channels, and that's how it's converting. So it's more data in the format that helps the landlord to argue towards their client tenants.
Right. Thank you. So, Frederick, on talking a little bit about ESG, and as we had, as Hubert had given this presentation, are you seeing more questions being asked on, let's say, on from the tenants and or from consumers, or or from the banks or the investors? Where are the ESG questions coming in, and or expectations?
Especially from investors.
Investors, yeah.
Especially from investors, banks also are starting to ask ESG strategy, but especially investors, we have quite a lot of clients from Germany in our portfolio, and in Germany it's very we can say a strong trend. They are looking at the CREAM tool. It means to be under the line to achieve the 1.5 degree, not more than 1.5 degree in plus. And they are looking for new solutions, but they are also very conservative. So they take time to assess. And the banks, it will be, I think, for getting new financing, it will be more and more with ESG, we can say, items and requirements.
Right. And is there anything that, let's say, you could tell us that sticks out in your mind of like physical things you've had to change or processes you've really had to change to make compliant for the investors or to fit into your own compliance? Things that you're like, wow, we've got to change these windows, or we have to change this facade, or we have to change something inside, or the heating, and anything in the processes that has made it easy or made it go forward.
It is very difficult in a shopping center to be to
Yeah, sure.
it's really a very specific scheme, a very specific building, which is difficult to have ESG. We can say with all ESG requirements to fulfill. We did some small, we can say, small improvements. And I think all landlords try to do that by cutting, for example, the water supply if there is nobody in the toilet after 30 minutes. So it's and it's also for the savings. Always we are also talking about money. We are looking at photovoltaic, of course, which is not so easy to install. Or on the shadow structure on the car park, or on the roof, combined maybe with a cogeneration. Cogeneration is with gas, but gas is much better than coal. So we can gain a lot of we can say a lot of CO2 savings with this kind of solutions. Of course, BMS, but this is, I think, everybody is doing it. We are talking also with we can say photovoltaic farms, maybe to supply the shopping center.
But they have to be in pretty close proximity, yes?
Not always.
No.
No. But it's what they call a virtual PPA. There are a lot of solutions, but we are quite small as a one shopping center. We are quite small to attract photovoltaic farm and to contract them.
Right.
So it's not so easy. We prefer to install on site.
Right. And I've seen on the roof a lot of these shopping centers, there's just physically no room. It's not a big flat area like a warehouse or
It's not easy.
something. Yeah.
It's why we are also looking at a shadow structure on the parking, which is obligatory now in France.
All right, right. And Thomas, we talked in the previous panel. Anya Duvkovska mentioned the two let's say the two categories. Of course, were logistics or warehousing, but also PRS development, and that really picking up. How are you, or what are you suggesting, or what are you talking about with your clients that are looking at some PRS projects, and how are they developing in Poland or in the region here?
I would say that all the ingredients you need are in place. So the demand is there. Depending on the studies, it is said that between 1 to 2 million units are missing in Poland. And it was before the war and before all these Ukrainian refugees came to Poland. So the demand is there, and it is robust. There is no actually there is no product because developers are reluctant to some extent at least to sell to institutional investors because of the strong demand from the individuals. There was a window of opportunity between, let's say, September last year until February this year, where the individuals were less buying, and some institutional investors used this window of opportunity and contracted few blocks or few hundred of units. But right now, with the governmental plan to stipulate individuals' demand or their let's say creditworthiness and ability to get a cheaper mortgage, this will probably invert again. Individuals will start booking bookings. Developers will again put new projects on shelves in selling points, and it will be difficult again to contract good quality product in good location for a reasonable price, especially taking into account again high interest rate in Polish zloty, because the residential market is the only market segment which is quoted in zloty in terms of buying, selling, and renting. And so far, single attempts of shifting this currency FX risk to tenants, individual tenants, were not successful. And as the vast majority of the market is Polish zloty quoted, so you need to have financing in Polish zloty, which is twice as expensive as euro nominated loans. So it makes Excel spreadsheets rather tight and difficult to get a satisfactory return on equity. It's really hard to make a decision to buy an investment product counting on, I don't know, 6.5% yield, with financing cost counting to 9 or 10.
Right.
And especially only few banks are already familiar with the product and ready to finance. They are more ready to refinance the existing portfolios, which we have only 2 or 3. But getting financing for a new player, for setting up new platform, is extremely difficult.
Right. And what I've also over the last year run into is on the PRS side is really quite a few operators out of Germany and out of Scandinavia looking for locations in Poland and Central Eastern Europe for retirement homes and running big scale retirement homes, which also fall into the PRS category. Are you seeing? I mean, a lot of Germans are retired here already, maybe not in that kind of situation, but looking for locations. Are you seeing more of that becoming developing in Poland and also in the region, servicing more? I mean, maybe some Polish clients, but just servicing more of the older Scandinavians and Germans that when I was talking to one of the biggest operators in Germany, he said, look, it costs 8,000-9,000 euros per month to live in our place in Germany. We should be able to do it for 4,000, 5,000, or 6,000. He said, but the big problem is there's just no places available in Germany. Everything's full. So they're more and more looking this way. So I guess my question is, are you seeing the real estate community looking at this as a potential investment and something that can be developed?
Yeah, when I was some time ago with Dom Development, we've been looking at this market segment. It is to come, definitely. We would not fool the demographic issue. Our population will get older and older only, and smaller. At least all the forecasts so far are predicting only this direction. So we would have to deliver one day this kind of product, this senior housing or assisted living projects. The question is whether it would be, pure 100% project dedicated to this kind of clients, or we would rather dedicate part of the building units on the ground floor, which are easily accessible with maybe some greenery on an inner courtyard, which will be dedicated to elder people. And we can provide maybe some additional services, assistance, etc. But at the end of the day, as you said, it is a matter of cost. Yeah.
Right.
Right now in Poland, as far as I know, the room. Probably not the flat, but the room or place in this kind of facility costs at least 3,000-4,000 zloty per month, up to 8,000-9,000 with international, let's say, operator. And it is only small fraction of this older population that they can afford.
Right.
So it is probably that we would have to take this on our shoulder we meaning our generation to secure a place for our parents in this kind of facilities, because our pension system most probably would not allow our parents to secure this kind of
Yeah, they would need
service.
their own money.
Yeah.
It would definitely be more
Of course,
private.
on the other hand, Poland has huge amount of residential stock, which is totally unlevered. So reverse mortgage or might be a solution, or just selling the property that the old people hold. And putting this money on a kind of a fund that will finance their maintenance of their life after retirement might be a solution.
Yeah, I mean, reverse mortgage, that they're, I think 15 years ago, it was really like barely heard of in the US, and now it seems most people are doing it, or at least it's becoming more standard. Yeah, before they were like, oh, we'll never do that, and now it seems like it's becoming part of the just standard mortgages that are coming through. So, Hubert, I saw one of your slides. You had your ESG up there, and there was one thing you had. It was on the E, so of course energy and this, and you had environmental balance. So what is that compared? What is the difference between environmental balance and just saving energy? And is there some? You had it as a separate line, more as the storytelling than as the
It's the approach.
regulation. Yeah.
It's the approach. Yes, sadly, we are on the beginning of the journey. Sadly, we are in an environment of high interest and inflation, which will remain the next 3 years for sure. There is no sign whatsoever that it will change. And we have, as I mentioned before, 20% lost on the commercial valuation, and we will lose another 10% for sure. And if we don't do the homework now, everybody who is not starting the homework now will face further discounts. But what is about ESG? I outline it's not about reporting towards regulation. It can be a subject for an institutional investor platform like Invesco to do so because it's required, but that doesn't help the asset. So if you're talking about climate balance in a way of the S or the E for a single asset, you can't change, if you are in Poland, the energy mix significantly. You can maybe try to purchase green energy somewhere, but the majority will always be produced in coke power plants.
Yeah, I think it was 90%. Now it's about 75%.
Yes, right.
Yeah.
So, and the funny part, it's not an issue for ESG compliance at all, because you only need to be better than your neighbor. Your neighbor is doing the same. He's in the same environment. He's in the same city. He's maybe even on the same street. He maybe has the same asset class, but you need to be better than your neighbor to make money. You know, coming back, the art of sustainable performance is to make money, doing good and making money at the same time. Because if you're resi for rent, we know that everything which is in the pipeline now is basically not designed ESG compliant, full stop, because it was ordered 2 years ago. And now they desperately think they can adjust the product, which is already in production, towards an ESG compliance playbook, which is hardly possible, right? I mean, it's really costly. But what you can do by engaging your tenants and the community, go to Nice. Nice was a shithole for 20 years. Now you're going there, you like and will love the city. Why? Because they banned the cars, they invented the metro line for €1, one line. The bakery is artisan. They only can sell baguette in France if it's an artisan bakery, so he needs to make it on the spot. And the production scheme is on the first floor, and the shop is down. And you're walking through the city to the old town. Everything is clean. People are suffering to get there, to get the experience, to get the vibe in being there. So you would not count an old asset standing there, being a restaurant, being a resi asset or something like that, because it's old and it has an old heating in there, if there is any heating in south of France.
Yeah.
But
they don't need heat in there. You just bring sweats.
But you would account where they taking their products from, and if he can prove, you know, this is a regional product, a regional grain, and the employees, basically he takes care on the employees that they also have affordable living by working for the company or for the bakery shop. This is also climate balance, because again, 60% from the carbon goes in commuting. So if you are able to avoid commuting, you are already climate positive and you have a positive climate balance. Well, the retail, we are discussing in Germany how we can rescue our cities, right? Because retail dies out. Well, it's simple. To make it livable again, so people want to come back and live in the city, example Nice, and want to shop next door, So this deglobalization is also a part which we can learn to bring, the point of sales closer to the customer, as we do it with the offices now, right? A 15-minute office is only makes sense because you avoid the commuting and you make it affordable and convenient for people to go to the office and use the office for work instead of being home. And you only can do that if you avoid the commuting. So this all plays into this climate balance.
Right. Even in Paris, the mayor there years ago started this 15-minute city, right, where you can live, work, and play all in the same 15 minutes of getting around. So if we have any questions or comments from the audience, please raise your hands. We've got our hostess in the back here that will give you the microphone, and feel free to ask anything. If not, we'll kind of wrap up the panel. And I think Frederick, maybe we'll start with you. Any kind of closing comments, pearls of wisdom to leave us on the retail side or business side? Let us know.
I think we all experience a very, very difficult time with the pandemic. Now with the war in Ukraine, we are facing a new situation that we really don't know what will be. But still, we can say the industry quite healthy, especially in Poland. Even in Ukraine, shopping centers are working very well. We have 99.8% occupancy in Lviv. It's amazing, and they are paying rents. People are coming, so there is a hope that people really want to live well, to have a fine experience, and we have to take care of the planet. Yes.
Right. Yeah, I was in Lviv last June, and it seemed like they doubled the population in the city. Maybe it wasn't that much, but it really seemed like it. So good to hear that it's going well there, and no disasters. Hanu?
So within the past years during the COVID and now the war, inflation, interest rates. So yes, there has been all kinds of challenges, but at the same and also included their e-commerce challenging the retail. And what was being said here that how city centers are changing from the retail perspective, and some of the of course malls are also located in those areas, but this industry is quite resilient, and it has been proven quite many times within the past months and years. So it is capable of adapting, and what I believe the same will happen again now. And from real estate perspective, this segment is one of the most adaptive and not so conservative and slow moving as the other segments. That's what I've been learning as well. So that is one what we are going to see, and let's leave it there.
Okay, thank you. Thomas, any final comments or angles?
As far as retail is concerned, I do believe that, of course, it will require effort because what counts today is experience, customer experience. But even this first generation shopping mall will have their chance if the asset manager or landlord will pay attention and take care. And will reinvent the shopping again, because usually it is centrally located, very well communicated, and has a great catchment. What you need to deliver is a new experience, new quality there. realizing ESG targets in parallel. So having, let's say, those two targets, you can convert existing 20-year-old old-fashioned shopping mall into really vibe destination, and add maybe another function as well, some resi components or PRS component. Convert part of the huge parking lot which you don't need anymore, and yeah, not only reinvent, but maybe also add the value or increase the value and make it sustainable for next decade or two.
Yeah, and then these first generation shopping centers, and sometimes you look at them and you go, wow, these guys really have a problem. But generally, they have great locations.
And a huge plot.
Yeah, and a huge plot in the, a lot of times in the center of the community. So it's just a matter of, and then anything even that's opened new is usually a little bit further out of town, or.
Yes, of course, as I said, you need to reinvent the concept, but usually it is already, fully amortized. There is some financing probably in place, but if you would go to the investors, to the bank with a good idea, good story, you can convince equity providers and banks and refurbish, add new function, and make new class of assets.
Right, and I wouldn't say in every city, but in many cities, I see the local governments are quite helpful and actually want the voters to have a nice place to go. Yeah, and they will assist.
They don't need 400 car parking lot anymore,
right.
And you can convert it into a new function next to your shopping mall and add value.
Right. And Hubert, coming to you at the last, definitely like to get your comments, and also how would you rate the overall real estate community from let's say 1 to 10 as far as trying to follow the ESG compliance in Central Eastern Europe, or at least knowing about it? And I'll even say compared to last year or the last couple of years. So you don't give them a 0. Yeah.
Minus. No, I mean, seriously, we are in the middle of recession. What the media want to tell us is just bullshit. If you want to order a Tesla 1 year ago, you need to wait 18 months. If you order it now, you're getting in 4 days and 10% discount. This has only happened because consumer purchase power is impacted by inflation. We have 26% in Hungary. We have 12 to 15 in the rest of CEE. And that will last for the next 3 years. That means we are losing 50% of our purchase power over the next 3 to 4 years, right? And that we do not need to go to university to get that. And for the real estate concerned, it's lucky. In 5 years from now, post-prospective, we will be happy that it all happened, with all, of course, the disruption which is on the way. Of course, with a lot of value we lose, because the last 15 years was just the Titanic. You didn't need to be a great manager to make money in real estate the last 15 years. You just bought something, you wait for a while, and you sold it, right?
My mom made a lot of money in real estate, and she goes, oh, I should get more into this. And I'm like, no, you know nothing about real estate. The market just went up 50%.
And it would not be so sad if it would not have been after the global financial crisis, right? I mean, usually we should be able to learn from the past, but obviously we are not. So now, if it comes to ESG, it requires change in, commitment, management, behavior, engagement, whatever. What is ESG? It's an improving of quality. If it comes to the E, we are carefully managing our resources. We're counting resources. We want to know where they come and how they are used. If it comes to the S, we're engaging the stakeholders, our employees, our tenants, our neighbors. If it comes to the G, we are getting more transparent what we are doing, right? It's all for improving the quality. And this is the only possibility to gain more quality for our products, which is good for our users, and with the users comes more money into, yes, a few asset classes like a B and C office you can tear it down and convert it to Resi or whatever. They will not get new users, but we see, and Sky in the Roots is a good example, you can convert them, you just need to have new ideas. When it comes to overall awareness of the ESG, how does change happens? First, you need to raise awareness, then you can get engagement, and then you can execute, right? That happens for all the change. I would say we are still on the subject of awareness. They say, according to whatever data, 70%, I guess it was the poll and Property Forum 2 days ago in Warsaw, the poll said 70% of the 200 people in the room, we have an ESG strategy. I don't believe it.
Okay.
They think they have,
Right.
but they don't have. But it's good because 70% at least are aware of the need
They knew
of
what
a
it was.
strategy.
They knew what it was.
And that's the good news. So 70% are aware of the need of a strategy, and that's the start of the beginning. If you compare year to year, you also, it's so fast, it's so progressive, and that's the good news, that you actually should, usually, in the old days, we issued one time a year a market report. And now I think we should do it every 6 months because the change is so imminent. You feel it, it's visible, that it's getting real fast. And this is the positive summary. We're on the right path, but it's a long way to go.
Excellent. Okay. Well, thank you all for the panel. We'll wrap up the panel. Can we have a big round of applause for our speakers? Well done. Thank you.